Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 12th of June, 2018. We're about 5 o'clock, so I can't take you to these boards because they're erased already, so I can't show the high and low. We're better off just starting off right here. And the one thing you can see is for the week, you're down 15 cents in the beans. Today we had the crop production reports, and we had the carryover numbers. And in a nutshell, it looks as though we had less wheat than we thought. Even with this bad harvest and all the problems, less wheat. Corn got a bit of a pop. I don't think the numbers were that bullish, but a little friendly, no question. And the beans didn't go anywhere, as you can see. In fact, when you come to the daily chart, you get to see that the market finished 3/4 of a cent higher. It tried to rally off the report. There was no question. Everything got a good pop, but this just couldn't hold in there whatsoever. When we take a look at the swing lines, you can see how you've come down from this 1060 area all the way to 972. You've almost got a dollar break. There'll be a point where enough's enough. That's one of the ways to look at it. The other thing that's going on is the market's got lower highs, lower lows. So the trend is down, and obviously the market is extended on the downside. When you had the bearish crossover, which is when an 18-day average of closes that you see right here gets underneath the 100. That is a bearish setup normally. Does it always have to be? Well, in theory it does, but does it always work that way? Theories aren't reality. In this particular case, yes, it's worked out that way. So the bearish crossover is in play. You've got levels of resistance should you get bull news later on at some point back at the 18 and the 100-day average of closes. My max, different ones. The market is riding the lower Bollinger Band, just dropping right on it, not getting away from it, and it is oversold. Can't tell you when it's going to bounce. I can tell you the market's just in what I'll call almost a vertical price drop, and those are difficult to catch. Not much you can say about them. You don't have the same thing going on in meal, but you got a more bearish situation. Why? Yes, you've got the lower highs, lower lows. Yes, you're riding the lower Bollinger Band, but if you look at what's going on, the two numbers that make up the slow stochastic, they're called a K and a D line, the red and the blue, they've been going sideways under 20. Now, this was today, this is yesterday, the day before, 3 days in a row. Not this day, but here's Friday, Monday, Tuesday, which means until that red line gets over 20, I think the bears are waiting for this market, maybe in the 100-day average. If they can get rallies, I would expect to see the market get sold. In the soybean oil market, look how it caved in today. If you look at yesterday's action, you had ridden the lower Bollinger Band. You were trying to get the market to embed, and you can see what happened. It's just fallen apart. The whole soy complex is now in the bear camp. The question is, how deep does it want to go? In the corn market, we had a bounce, but you have that embedded reading. So as a trader, I look at the strongest technical indicator, which is until that red line gets over 20, I am very much in the bear camp. You've got lower highs, lower lows. First resistance, 405. That's up at the 100-day average of closes. And what you don't know is going to happen, I don't know if it's going to happen, will that 18-day average gradually start getting under that number to try to drop prices lower? You have come down from the 430 level to 388. Somewhere along here, there might be another challenge of these lows. We'll see what happens. In the wheat market, wheat made a statement today. Had a big outside day up. As you can see, you didn't get up to yet. Today's high was 553 and a half. That didn't take out the last swing line high, but it certainly took out yesterday's high and low in the market. And as I'm looking at this marketplace, you've got the higher lows, you've had the higher highs, momentum is turned up. Till you take out today's lows, this market's back in a bull trend. Maybe it's going to target the upper Bollinger Band. When you come to the sugar market, it's back and forth action now. So the market comes down to the lower point where it's got a lower low, then it gets up to a higher high. It's called Chop City, not Chop Suey, Chop City. This is a market that came out of a downtrend, stopped at the 100-day average of closes. It was riding the upper Bollinger Band. That proved too much, and the question is, what's the next move going to be out of sugar? I can't answer that. In the coffee, the trend is still down, and what you don't want to see taken out is 120.20. If it is, you could end up with a reversal pattern on the swing line where you get higher lows, higher highs. So the bears have to defend it here, and the problem for them is that you're oversold and you've had a heck of a break already. In fact, a straight down break that we talked about earlier in the week. In the cocoa market, you've lost the bearish embedded reading. And when you lose the bearish embedded reading, this was yesterday, this is today, often price makes a run at the nearest moving average. In this case, it would be the 100-day in that 2480 level. The swing line is up, so you're out of the downtrend. Momentum has turned up. It could reverse tomorrow with a big break and re-embed. It's doubtful, but without that, I'm looking for price to get to those moving averages. In the cotton market, here too, we had a report that didn't hurt the market today. If we look at what's going on with the slow stochastics, both numbers are over 80 today. Not so yesterday, but the day before, not the day before. You don't have an embedded reading, is my point. You need 3 days in a row. So you just have an overbought condition with a lower low and a higher high. Again, a hard chart. In the cattle market, you peaked out against your challenge of the upper Bollinger Band. I think we had talked about that yesterday. That's where I think pros, on the first challenge of Bollinger Bands, I think professional traders often, and the word is not always, I don't know what they always do, but I see this often enough where I can argue that it acts as resistance in the first challenge of the upper band, support on the other. Can it just slice through it? Of course it could. Here it hit it, and finally just gave way. But the issue is that the algo is built so that 95% of the time the market will trade within the bands. Well, you took out that low. Uptrend is over as a technician. The bias is still up and momentum is turned down. In the feeders, again, you don't have the swing line up. So now I have a higher high, lower low. That's not a trend. The market's making a run for the 18-day average of closes. Missed it by 10 points today. Momentum is turned down. Again, another market that had trouble instead of the upper Bollinger Band at the 100-day average of closes. And in the hog market, a big inside day today after a huge move down yesterday. I don't know what you've got here. It's trying to say lower highs, lower lows, but it closed back over the 18-day average, and momentum's just going sideways. So you put it all together, and you got one heck of a game that you're trying to figure out what do you do with, which is never easy. You know, one of the things that I do is I write a lot of commentary. And I write it in a way, and we take it and we wrap it so you can watch it on your iPhone, your pads, or your PCs. It'll come to you in all different ways. When I send it out, if you're a subscriber of mine, I can even send a text message that it's come out, which we're going to switch to the notification. So that very shortly on your smartphone, a notification is going to come out and say, here's Ira's information, click it, and it takes you right to that page. We're days away from that. We've been working on that for quite a while. Now, there's two ways you can get my commentary. Some people want only my commentary. When the free trial runs out, they can get that. We offer that at $25 a month or $240 for the year. Other people want my commentary along with my trade recommendations, which is fine. I spend a lot of time on this commentary, and what I try to do for you is make it where you don't have to go read 50 different websites. You're going to hear information galore because I'm scouting for things all through the trade day, the time you don't have. If you haven't tried it, do so. Give us a call. Go to our website. You can sign up for a free trial. You can click up here or under us on many websites. It says, click here for Ira's free information. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.